So the Taiwanese index is up 300 points right now. The Hang Seng is up 132 points.
Operating profit growth of just 8.8% YOY is perhaps the weakest in the last 11 quarters.
ये पूरी तरह अर्बन नक्सल उस सोच का सीधा प्रकटीकरण है.
The high of 22,620 will be the first resistance level. You've got the first rates coming up on our screens. You've got 22,490.
I don't think there is any extra regulatory action which has happened.
The aspirational range of 19 to 20% that we have talked about is a little pushed out right now.
The news flow is that the companies have been asked to pay regulatory fees to SEBI based on annual turnover calculated from the notional value of option contracts.
Yes, I think Keyman is looking at some inorganic growth.
किसी भी वर्ग के व्यक्ति होंगे इनको आयुष्मान कार्ड देंगे मतलब देंगे.
Markets are strong. The benchmark indices are up close to about 0.5%.
Sri Lanka has tremendous to offer in tourism.
In fact, even going on to say that while the medical profession invites more regulation, there is no space available for such fixation of rates.
What a recovery, or I would say what a stellar run-up that we've seen, especially in the Bank Nifty, and that's leading to that gain that we're seeing in the Nifty as well.
Well, that's the day so far, and what a fantastic day that we're having. And it's all a big thank you to banks, which are really leading from the front. And that index is really having a super day. This is Closing Bell. We are coming to you as always from the CNBC-TV18 News studios. I'm Prashant with my colleagues Surbi and Nigel. Guys, hi. Afternoon.
Hi, good afternoon. You know, Hormaz and I were just going back and checking when was the last time we had such a stupendous rally. 1111 on the Bank Nifty at one point in time. So basically 1100 points. It's about 2.5 months back that we had such a move. And it's a unilateral move. It's cutting across, I mean, SBI, Axis Bank, even Kotak, which was slammed so hard, HDFC Bank. But it's a big one and it's taking the market along with it.
Well, that's right. It's a large cap heavy day, right? Because the Nifty is doing very well. The Nifty Bank is in perfect form. But if you look at the broader markets, there are some stocks that are seeing some profit taking. And the mid cap index is doing a relative underperformance. And on a day when you have the Nifty up 200 points, you have the Nifty Bank that's up 1,000 points. Well, you have the breadth of the market that's 1:1. So, you know, that's telling you the story of the day.
Absolutely. Large caps is what is doing the trick. I mean, actually, the last few days as well, right? Bank Nifty was not performing, but that was largely because of private banks. PSU banks had a good last week as well, and a good the week before that as well. It was private banks, the HDFCs and the large other private financials which were not participating. Bajaj Twins, for example, that was a bit of a drag. Today, it's all changed. So 2% on the private bank index. The PSU bank index is up 2%. SBI continues to charge ahead. Bajaj Finance has turned around a little bit. ICICI Bank is the largest contributor to the Nifty and the Nifty Bank gains. So that's where bulk of the excitement is really at right now. But, you know, we'll talk more about banks, but just a few points. We are basically back at Friday's high, and that is the level to take out, 22,620. Intraday, we've already kind of breached that, but a closing above it and a solid close above it will, give more confidence that we've kind of finally, we're taking out this, resistance zone and moving higher. We'll see. Bank Nifty is also, of course, at a new high. And more on that. Broader markets is a little slower today, 0.5%, 0.3%. If you look at the mid-cap and small-cap indices. And real estate as an index is down about 1.5%. That also we will talk about as we go along. So this is, I mean, otherwise a pretty good screen. One thing I have to say, the earnings, and you're seeing more and more of earnings, maybe it's just a case of very high expectations and the fact that F524 was very good. But you just look at how stocks are reacting to earnings. By and large, we'll have to look at the exact numbers, etc. But more often than not, it is on the way down. That we'll have to see. Maybe still too early to kind of take stock of what is this earnings season doing to full earnings expectations, etc. But we'll try and do it by the end of the week or so. So that is what you have on the index, about 200 points, 22,600 plus. Surbi.
Yeah, absolutely. If it hadn't been for this massive Nifty Bank rally, maybe the mood of the market would have been very different today, because it's been sort of dealing with a couple of heavy bruises the past couple of sessions. Friday was all about Bajaj Finance, and even today, I mean, you have those big names, HCL Tech, for instance, which is still down 6%. The market not able to entirely immediately digest the kind of guidance that they've put out, lackluster body language as well. And then, of course, Apollo Hospitals. It's recovered a lot, Apollo, by the way, from the lows of the morning. But the market still seems to be having several questions on that deal with Advent, the structure, and how sort of they'll go about amalgamating that promoter group entity with Apollo Health. More on that stock as well as we go along. But for what it's worth, the large cap screen is on fire. I definitely want to see, the FI number. It's been a sell number for the past many, many days in the cash market. Not sure if it's cash market buying or some sort of short covering, but it's a spectacular move in the banks.
Well, that's right. In the next 60 minutes, if you thought we got enough results so far, we'll get Ultratech Cement as well. And just going by the screen, the street believes maybe there's a positive surprise in the offing. So we'll have to see whether or not that does play out. Because for the time being, the stock is up close to around 2.2%. Dalmia Bharat as well, that got smacked last week. Well, that is showing some sign of a bounce back, even in today's trading session, up close to around 2%. So let's see what Ultratech delivers. That's the big boy. That's the king of the cement market. If it can surprise positively, or maybe margins don't compress on a sequential basis as much as expected, the street will take it with both hands. But it's a good day. Let's get in a technical check then. Mitesh Thakkar joins us. Well, Mitesh, if you bought the Nifty on that fall that we saw in Friday's trading session, you'd be very, very happy. The question is, what do you do when the Nifty is up 200 points? And what are the levels on the Nifty Bank? That's clearly been the big outperformer.
See, I think today, as you rightly said, is the day of Nifty Bank. It's the banking index which has given this breakout and is showing an amazing strength. And my sense is that I think, that's where the next few days could be concentrated upon, given the fact it's a fresh breakout suggesting, momentum happening. So I would look at a couple of banking and financial names. I think Bank of India is something, which is a smaller bank, but has broken out of a good consolidation. So here can be bought with a stop at about 151 for targets of 162. And PFC is a buy as well. Keep a stop below 407 and targets of 430 can be looked at.
Okay, all right, got that. Stay on, Mitesh. We'll have more questions for you as we go on. Let's take some of these important movers and shakers of the day one by one, starting with Apollo Hospitals. As we've been just telling you, the stock's been under pressure right from the morning. It fell as much as 8% in the opening trades, and now that cut is down to about 5%. The concern, of course, is on the contours of this deal with Advent. Obviously, there's money coming in, but there's also the other transaction, that is the merger of the promoter group entity, Kaimed, into Apollo Health Co. And then, the valuations, etc., and the growth targets, the margins, etc., that will then arise for this blended entity. Ekta is here to highlight, of course, what the key concerns are and what the view is on the street. Ekta.
Well, yes, the key concern is that it is a complicated deal which they've done. Jeffrey says that Apollo Health will now need strong execution given a complex structure. Now, separately, there are concerns about the Keimed merger. For example, the related party transaction with Keimed is at the end of the day a related party transaction, and there is a promoter entity being merged. Now, the other sore point, according to a lot of brokerages, and they've written on it, is that the deal valuations for Apollo Health are lower than expected. CLSA says that it's a discount of around 5,600 crores to the CLSA valuation. Jeffrey says it's valued at around 14,478 crores versus their valuation of around 17,000 crores. Sunita Reddy, when we did speak to her in the morning, did say that yes, there was a discount to the valuations as per the market expectations, but it will form India's largest omni-channel play, and the timeline of the deal was crucial. Now, the other sore point is the margins. The Keimed margins are 3.6% for FY23. However, Sunita Reddy has said that they will improve margins eventually. So the target was around 7 to 8%, which they've guided. She's expecting to further it to a 10 to 11% based on the private label sales picking up. FY27 target of revenue is 25,000 crores and likely to be, achieved via the inorganic route. And there are some analysts who are on the street who are a little circumspect about this particular number being achieved in FY27. However, Sunita Reddy has said that they will look at an inorganic growth to touch these levels. Now, brokerages, Morgan Stanley, overweight, target price 7,181. They believe that the deal valuations were lower than expected for AHL. And Nuvama maintained a buy, target price 7,300, reduced from 7,500. They believe that the valuation for AHL was a letdown. It came in at 1.7 billion versus estimated 2.7 billion. And the doubling of Keimed's valuation in a year is aggressive. Fundraise will, however, minimize the cash burn. And they are, however, reducing the pharmacy target valuation from 25 times EV to EBITDA to 22 times with an SOTP valuation of around 290 rupees per share. So overall, brokerages are also a little sanguine. The street wants to see execution of all of the numbers and the consolidated entity to basically firm up what they believe.
Okay, all right, Ekta, thank you very much for that important context. Important to understand this. Let's also listen in to Ms. Sunita Reddy. She was talking about some of these issues, some of these concerns and the projections that Ekta just referred to.
We now will have a very strong balance sheet, which will enable the growth of Apollo HealthCo. And if you look at the entire transaction, it will create India's largest omni-channel pharmacy play. Added to that, of course, is the benefits that will now come from the digital network that we have created, which has multiple revenue streams. So we are enabling growth, we are funding growth, and we have a strong balance sheet. It could be at a 20% discount to market expectations, but I think having cash in hand and a strong balance sheet far outweighs that. Current margins are at 3%, but I think as we go forward, we have to look at the scale of KeyMed and the fact that it supplies to 70,000 pharmacies. We believe that private label is the right way forward. So if you look at, combination of both what we're doing, AHL offline and KeyMed, we're able to deliver a 10.7% margin moving into 11%. And that with the significant scale is actually a good number. I think KeyMed is looking at some inorganic growth and that will enable it to grow at around 20%.
Okay, all right. Deepan Mehta joins us. Hi, Deepan. Good afternoon. Good to see you in. What do you make of Apollo Hospitals? One of those big outperforming stocks, gets premium multiples. But I'll tell you what, the street didn't like. The deal is too complex. Besides it being a related party and the multiples, you can argue on it. But actually, the management made an important comment out there. They said that there's an upside to that 7 to 8% guidance that they'd given earlier for 25,000 crores for this entity. That's the merged entity. How would you approach the stock? It was down 8% earlier today. Now it's still down close to around 5%. And in terms of the commentary that came in from the courts with regard to those rate capping, well, it appeared quite favorable. So your view on the stock?
Yeah, Nigel, good afternoon and thank you for having me on your show. See, I was just doing a quick check before I came on the show. And I found that Apollo Hospitals price earnings multiple for FY24 is 100 times. And that's a staggering price earnings multiple, no doubt a great business, and really they have got exceptional track record and many, many positive fundamentals, including I'm not so pessimistic on the merger. It captures all the entire values, stream in the Apollo Hospital listed companies. But look, at 100 times P multiple, how can you justify a buy in Apollo Hospital? So at best, you can remain invested because it's been a great value creator. And if your cost of acquisition is low, it's an easy decision. But to buy at these levels, I think you need far too much of confidence and leap of faith and complete, faith in the management to execute and, maybe perhaps grow earnings by 25-30% compound for the next 3-4 years or so. And I don't think that's really realistic. So I would just put a hold on the Apollo Hospital at this point of time. And let's just wait and see if there's a correction. Maybe it's an interesting buy.
Okay, all right. But what else would you prefer then from the hospital space? If not Apollo Hospitals, as you said, valuations looking too steep, then what would your pick be?
See, I think Narayan Rudralaya is trading at reasonable valuations. Yeah. And they spoke about this capping of prices for medical procedures. That really is a risk factor for all these hospitals. But if they're able to somehow circumvent that or the entire government regulatory is diluted, then at the end of the day, I think hospital companies have a great future because spends on healthcare are secular and structural in nature. And Narayan Rudralaya in particular has got a very low cost business model where they focus more on acquiring hospitals and operating or managing them rather than actually constructing hospitals and owning the building and the plant and machinery which goes inside it. So from a return on investment point of view also, it's got best in class return ratios. And I think I would say pretty decent management considering their track record and corporate governance standards.
Deepan, stay with us. The big mover today, of course, are banks, right? Bank Nifty is up 2% or so. Abhishek is here with what is top of mind because there are so many bank and financial companies which came out with earnings. So let's talk about a few. Abhishek, afternoon.
Afternoon, Prashant. So take a look at ICICI Bank. The numbers have beaten our poll, although, core operating profit growth lags the loan growth. So in terms of loan growth, YOY is the weakest in last 12 quarters, and sequentially, that is quarter on quarter, it's the weakest in last 11 quarters. Operating profit growth is at just 8.8% YOY, perhaps one of the weakest in last 11 quarters. On the good side, cost to income ratio is at 5-quarter low of 39.2%. Asset quality improvement continues. Gross NPA and net NPA ratio are one of the lowest that you are seeing in last 9-10 years or even more. Deposit growth, that's at 12-quarter high, whether YOY or quarter on quarter. So YOY deposit growth is at 19.6%. Sequentially, the deposit growth is at 6%. Subsidiaries PAT on a quarterly basis has crossed the 2,000 crore level. So this is the highest quarterly subsidiaries PAT that you are seeing. Perhaps this time it's led by ICICI General as well as ICICI Securities. Now, risk in the balance sheet is perhaps the lowest in last 9 or 10 years or even more. Risk weight assets to advances ratio is at 103% versus 115% in the previous quarter. P&L, both the ANA and PAT is ahead of our poll. In terms of IDFC First Bank, the P&L is below our poll, and their guidance is that credit costs will remain elevated in FY25 as well. So credit cost as per management is expected at 1.65% in FY25. Remember that in FY24 it was at 1.3%. Their loan growth target is now 22 to 23%. After Q2 results, they did say that they'll grow anywhere between 25 to 27%. So loan growth target has been trimmed down, but deposit target has been increased to 28 to 30%, which means that incrementally you can see the CD ratio or credit deposit ratio decline for them in FY25 versus FY24. In terms of Q4 performance, risk weight assets to advances ratio, that's at 11-quarter high of 119%. ROA is at 7-quarter low, which is return on asset at about 1.03%. Asset quality has improved over there. However, the P&L, both the ANA and PAT is below our poll. In terms of SBI card, revolver rate has improved for the first time that I am seeing in last 8 quarters, coming to 24% versus 23% in the previous quarter. However, corporate spends for SBI card declined massively by almost 26.7% YOY and about 55.2% sequentially. Net interest margin is at 4-year low of 10.9%, and it has been on a declining trend. Their annualized credit cost remains elevated at 7.6%, which is perhaps at a 9-quarter low. And the management to CNBC has guided for a 7% credit cost that they expect in FY25. Asset quality, hiccup over there, 2.78% versus 2.64% in the previous quarter. Back to you.
Okay, lots of numbers over there. Thanks very much for that, Abhishek. Dipan, hi, good afternoon. So let's just break this down, one step at a time. And I actually wanted to ask you more about the tier 2 banks. ICICI Bank, yes, of course, I don't think much complained with the numbers, and it's really inspired a lot of confidence. But anything specific on the tier 2 names that we've heard from today? IDFC First, as Abhishek mentioned, below poll. Yes Bank, interestingly, is getting rewarded, though that the improvement is on account of, I think, because of very high write-offs this time around. There's a tax write-back as well. So optically, the numbers look better. RBL Bank has shown some very good growth numbers and good margins, yet the stock is not that hot. So, what's your take on tier 2 banks, and would you look at some of these names, or would you stick to the titans like an ICICI?
Yeah, so good afternoon. By and large, banking and NBFC numbers have been disappointing. They have been below street expectations by and large, and 2 trends are clearly emerging. First is that there's a lot of pressure on net interest margin because liquidity is tight, and RBI wants to keep it that way. So it's going to impact the way these companies, banks, as well as NBFCs, how they raise resources at reasonable interest rates. That's a big challenge. And secondly, the NPA are gradually inching up. It's not that the NPA cycle has started to worsen. It's just that because of year-on-year comparisons or quarter-on-quarter comparisons, the normal NPA requirements or provisioning requirements have gone up, and that is now denting the actual net profit. And although all the pre-provisioning profits also have been very anemic, they've been almost stagnant. Across the board, if you see, they are in the range of flat to 8-10% or thereabout, which is not at all inspiring and clearly doesn't justify investors to go and buy banks even at these levels. So I would say that my view on banks for the time being is cautious. No doubt, as compared to some of the other high-flying sectors, they are at reasonable valuations. on a P multiple basis in the region of 12 to 21, 22 times or so. But the going is getting more and more challenging for the banks per se because of the liquidity crunch which is there. So I think you can expect a couple of more dull quarters coming through from the banking sector, and maybe whatever purchases you want to do in banking stocks, you should perhaps postpone it by 2-3 quarters or so and see how the actual numbers play out.
Dipan, BSC, what's the view? Sharp fall today. Is this an opportunity? And also, if you will, I mean, I don't know if you own MCX. MCX is, there was a 8% fall. It's almost fully recovered. It's down only about 1.5%. So I'm a little surprised here. But your thoughts, these two names?
See, I think that I read some notes that perhaps at the BSE, the profit hit could be anywhere from 15 to 25% or so. And I think that being reflected in the stock price. MCX, the impact is much lower because their options volume is just about picking up and doesn't form as large a portion. So there's some explanation. I'm not yet sure about that. But amongst the two listed exchanges, or rather I would say 3 listed exchanges, IEX being the third, we are most positive on MCX. And that's because of the kind of rally which we are seeing in precious metals and now also in crude oil. And this year, I think, is going to be extremely volatile for commodity stocks, and MCX certainly will benefit from higher trading volumes over there. Also, there's a structural change taking place in the commodities volume where the options volume is surging over there as well. And if interoperability between all the exchanges is permitted, then MCX will be a major beneficiary. And all the hiccups around transitioning from 63 Moons trading platform to TCS are over and done with, and technology costs have clearly come down. I thought that the Q4 numbers were pretty decent for MCX, maybe Street thought otherwise. On a longer term basis, I think 1.5 years, in our opinion, MCX could be the real outperformer amongst the listed exchange companies.
Okay, all right. Dipan, I wanted your view on KPIT Technology. Just take a look at that stock. One would say that valuation-wise, it's not very cheap. Look at what that stock is doing in today's session. It's up closer on 6-7% after the big rally that we have seen, 7% higher. Run you through the numbers first. On a sequential basis, revenue growth of around 5%, 5.1% on a constant currency revenue growth. Margins, well, they're holding around 16.7%. That means on a sequential basis, well, it's up by 10 basis points. On a year-on-year basis, it's up 180 basis points. Deal wins as well, pretty good at around $260 million. But what's really the kicker is, just take a look at FY24. FY24, the constant currency growth is around 39%. Out of that, 32% is the organic growth. And on that sort of a base, they are guiding for a massive 18 to 22% growth. Let's pull up the constant currency growth for the year itself. I think that should come up for you on the screen. 39%, organic is 32%. And on that base, you're guiding for 18 to 22% growth, which is brilliant, with margins of around 20.5%. To give you a comparison, the ERD companies, if you look at LTTS, the numbers were good, guidance wasn't great. Tata Elxsi, well, it degrew by close to 0.6% on a sequential basis. That compares with JP Morgan's estimates, which were for a 3.5% growth. So in that sort of a backdrop, when they grow like this, the street really likes those numbers. Dipan, what do you make of the stock? At around 1,300 rupees, 1,350, 1,400 rupees, the stock is expensive. But they give a guidance, they outbeat that guidance. And that's unlike what we're seeing in the IT space today. And on high base, they're guiding for even good growth at around 18 to 22%. Your take?
Nigel, I think very impressive numbers, and clearly the guidance also has captured the imagination of the street. So only thing which is a bit negative in the stock is the valuation. And maybe, if you buy at a correction, wait for a couple of quarters for earnings to catch up, you may even get at a reasonable stock valuation. But at these levels, I think a lot of the positives have got captured in, particularly after today's rally. And, there could be volatility in earnings as well. So you could have a couple of soft quarters. One cannot rule it out. But, the focus of the company on very specific verticals where they're able to get large orders from OEM players, especially on the automobile side, that clearly has taken the company to a completely different orbit. And I would say that, at one point in time, Tata Elxsi, Tata Technologies was, in kind of the same league. But with these kind of numbers and this kind of a guidance, I think even KPIT has left most of its peer groups well behind. So I'm just, keeping it on my watch list. And whenever I feel valuations are reasonable, one could look at getting into the stock. I think this outperformance which we are seeing could be like a multi-year outperformance in terms of revenue growth. and which means that KPIT could be a market leader in terms of growth rates compared to the entire software industry.
Yeah, absolutely. I mean, in a landscape where it's bigger peers, of course, different businesses, when they're struggling with low single-digit numbers, it's been a phenomenal year for KPIT Tech and a strong guidance. Thank you, Deepan. We'll leave it on that note for this afternoon. Thanks very much for being with us. We do have to take a break with the news that the market is holding fairly steady on the large cap screen. The day's high for the Bank Nifty is almost 49,400, 49,399, and it's trying to inch back towards that level once again. Very, very strong day of trade for banks. We'll come back and discuss this and other trends more in just a bit after the break.
का एक वीडियो जो वायरल हो रहा है जिसमें मनमोहन सिंह जी ने कहा है कि गरीब मुसलमानों का पहला अधिकार रिसोर्सेज पर है, ये उन्होंने साफ कहा है। आपने उसको मैनिफेस्टो में भी ये बात पॉइंट आउट की है कि ओबीसी रिजर्वेशन का जो है पार्ट लेकर वो मुसलमानों को दे देना चाहेंगे, और 2004 से 2014 के बीच में उन्होंने 4-5 बार ऐसा करने की कोशिश की भी।
अरे भाई, ये तो बड़ा इंटरेस्टिंग सवाल आपने पूछा है।
Welcome back. You're with us on Closing Bell. Green afternoon for the large caps especially. Well, let's talk about Tech Mahindra. Now, this stock has been making headlines right from last week, from last Friday, after that stupendous rally and the management putting out a plan and the market really liking everything they've heard. Now, we've got some follow-on buying today, and Nimesh alerted us about this in the morning with a standout brokerage, which is a view coming in from Morgan Stanley. But then you have, bulls as well as bears on the stock. Nimesh, over to you. It saw some additional buying and then a bit of a cool-off. What do you make of the street views?
Well, so there is an equal bull versus bear for Tech Mahindra at this level. So, yeah, in the morning, I highlighted a Morgan Stanley note where they've double upgraded the stock to an overweight. But in the afternoon, there was an equally, bear argument as well from Citigroup. So they maintain a sell. I'll start with Morgan Stanley first. So they've upgraded the stock to overweight now. They've sharply raised the target price to 1490. Now they believe that the medium-term outlook on growth, margin, as well as capital allocation should set a floor for the stock around 1150 levels. So they're very clear that the stock may not fall below those levels of 1150. In terms of medium-term outlook, they believe that management's tangible and quantifiable outlook for by 27 makes it a self-help story. In fact, they see the quarter-on-quarter improvement in margins, YY improvement in revenue, and diversification away from telecom should be the key catalyst for the stock going forward. So Morgan has a very strong bull view on Tech Mahindra. On the flip side, Citigroup also put out a note in the afternoons. They maintain a sell rating on the stock, and they have a target price of 1,095. Now they believe that while the street got excited with a 3-year view from the management, which seems to be positive as well, but the stock has already rallied 10%. The stock is now trading at close to 20 times on FY25 estimates, which is in line with both Infosys as well as HCL Tech. On one side, while the street is getting excited from the management's commentary and outlook where they are targeting about 15% margins from what 6.5%, 7% currently. They believe that the environment is quite tough. So, in fact, not a single company in the last 10 years in the large cap IT names have improved the margins by 900 basis points. What Tech Mahindra is aiming for. So it's going to be very, very tough. And to assume in the base case, that's not something which Citi is believing. So they maintain a sell call with a target price of 1,095. But in the morning there is a double upgrade from Morgan Stanley with a target price of Tech Mahindra at 1,490.
Okay, well, you have a bull for every bear. Maybe not exactly 1:1, but you need all kinds, right, to make the market. Ramesh, thanks very much. That's interesting as always. That's Tech Mahindra for you. Ultratech numbers we'll go to in just a bit with Nigel for more analysis. But let me get in Ajay Vora, who's with us, Head of Equities at Nuvama Asset Management. Ajay, okay, I think...
I'm
just
ready.
hold on, Ajay. Just coming to you, but... I think we have some details on Ultratech.
These numbers look good, actually.
Yeah.
On the top line, there's a beat itself, if you're looking at it, because we were working with around 19,975 odd. It's coming at around 20,419. So that number gets a thumbs up. The other interesting factor is that we were looking at around 3,700 crores approximately of a EBITDA number. It's coming at around, it's coming at around 4,114 crores. I think that should come up for you on the screen. And this is surprise, actually, because on a sequential basis, the margins have moved up, from around 19.44%. On a sequential basis as well, there is an improvement. Most on the street were factoring in a contraction. And that's what we have seen even for the other peers. Whether you look at Dalmia or you look at ACC, there is a big compression on a sequential basis. So this, in fact, is looking quite good in terms of the numbers. I'm just trying to pull out further details. Where exactly could there be a bit of a beat? If I look at the freight and forwarding cost, well, that's a little bit higher. So we'll have to just check exactly what did play out. Waiting by for the volume number as well, which will be quite crucial because how much of this beat on the top line?
11% volume growth during Q4 FY24.
So that's better. So we were at around 9 to 10% approximately. So 11% would be better, in fact, what we were working with. So it seems the top line beat has flowed through. And that's why, in fact, you have an operational beat that's taken place. These numbers look good. I'll give you a few more details out here, in terms of the consolidated sales they're saying. All right.
Also, Nigel, if I can sort of add from the press release I'm just reading out, the imported fuel consumption cost is down 13% year on year. So that's, I guess, where the operational improvement is coming.
That's the beat. So I'll just give you a few more details, which we should get up for you on the screen. They recorded a volume growth of around 11% during the past quarter. They achieved full year EBITDA, that's the full year number, 1,100 odd. And pet coke as well as coal prices, they witnessed a drop in the last fiscal, and the company's imported fuel consumption during quarter 4 was 13% lower on a year-on-year basis and flattish on a quarter-to-quarter basis. The effective capacity utilization during the quarter was 98%. So that operating leverage has played out. A thumbs up coming in for Ultratech. We look at the numbers in greater detail. But for the time being, our top line beat, margins expanding on a sequential basis. You love that. We're working with the contraction, so that didn't happen. And in this sort of a backdrop where pricing was weak, it appears the operating leverage and the focus on cost clearly playing out. The king of the cement space, Ultratech Cement, a thumbs up as of now.
No price increase. I mean,
price increase is unlikely.
Unlikely. Yeah, that's what we were talking about earlier as well with Dalmia, if you remember last week.
And in fact, there would be some bit of a compression because if you're saying that the volumes went up by around 11%, and if you're saying that the top line growth is 9.5%, so there'll be some compression. But even despite that kind of a compression, the focus on cost and operating leverage, well done.
Thumbs up. All right. Ajay Vora is with us, Head of Equities at Nuvama Asset. Ajay, good afternoon. Good to have you with us here. Just a quick word, if you will. Cement, I mean, if you like the space, the worry in a way has been there's been no real price increase, nothing noteworthy, in the first quarter before the rains hit and all of that. But companies like Ultratech are able to squeeze out, operational efficiencies and sort of improve on profitability, etc. Do you like the space? What's the view?
Yeah, good afternoon, Prashant, and thanks for having me on the show. So yeah, we are constructive on this space, but obviously, within this space also you have to be a little more selective in terms of companies which have very efficient cost structure, and most importantly they have scale. So Ultratech definitely fits there because now the size is reasonably very large, and they are doing an excellent job on the overall branding and also cost structure. So I think, you have to be very selective, but obviously, as you rightly pointed out, that during monsoon, we don't see that kind of a price hike, and also, elections are going on. So the overall construction activity also slows down. So my sense is that someone with a 1 to 2 year kind of a view at least can be really positive on this space.
Ajay, hi, good afternoon. Let's talk financials. I remember our last conversation, I mean, you were pointing out that we need to watch for margins carefully. But I guess so far in the season, at least on the larger banks, we've not seen too much of a margin compression or destruction. Could be 5-10 basis points here or there. So what's the sense? How are you looking to play the banking space? And also then, maybe a word on the likes of NBFCs. When you have the industry poster child, Bajaj Finance itself lowering market expectations, talking about pressure on NIMs going forward, pressure on growth growing forward. I mean, where does that leave you with respect to NBFCs?
Yeah, hi, Sulbi. So, banking now, honestly, I feel that, it's in a space where everything else has become so expensive. If you look at all the sectors, most of the sectors, I would say, and therefore banking to some extent looks far more attractive. And within that also, as you rightly pointed out, that, they have navigated this whole NIM compression cycle in a far better way. And most importantly, growth was still there across most of the larger names. So my sense is that, if this whole NIM compression is bottoming out, maybe not now, but maybe a couple of quarters down the line, and then if you build in, fundraising, which has been announced by a couple of large private banks, stocks are looking extremely cheap. And if you compare that with other sectors where, growth is actually non-existent, at least for FY25, valuations are still looking high. So as I said that, if you compare across sectors, banking is something which is finally, left to buy. Everything else has moved quite a lot. And therefore, we have seen this kind of a rally, what is happening today. Coming to NBFCs, I think, again, over there, we would like to be very specific because, it all depends on the business model and, what is your overall, the funding liability kind of a mix and all. So my sense is that, recently a couple of companies who announced the numbers on the vehicle financing side or a couple of other names as well, they are extremely well positioned and they still have a decent runway from here on as well. So within NBFC, I would say that, the regulatory, the overhang is there within that space, and now it is also on the banking side. But I think that, compared to all other sectors, this is looking far more well positioned from here on.
Speaking of regulatory overhang, Ajay, any specific take on Kotak Mahindra Bank? Not asking, specific buy or sell, but just, last week told us that even the biggest of the blue chip banks may not be spared. Your views on the kind of price action that followed?
So I think we just have to assess that any kind of action, what impact can it have on an overall earnings trajectory, right? So as you also must have read, because the action will definitely have an impact on the overall growth and most importantly profitability as well. And therefore, we have always historically seen how Kotak Bank's growth has been. It's been a little more volatile versus, I would say, other banks because they generally end up taking calls on the business cycle, and they have many verticals. Their exposure is to quite a few different business verticals. So I would say that, we need to see how the overall growth gets impacted because of his action. And stock is definitely cheap. But I would say that, it's better that you look at other names where the proportion of, I would say, secured loan is pretty high. The profitability is intact. And most importantly, at the end of the day, what matters is your ROEs. So I think a couple of other banks are offering much higher ROEs and growth profile within this space.
Okay, all right. Got that. Just a quick Ajay, just give us a sense of which parts of the market you're focused on as you continue to sort of deploy and participate. Which are the top themes?
So Prashant, we are forming a view where we would like to be a little more cautious from now on till maybe we navigate the two big events, which is the election and the subsequent budget. And why do I say that is because if you look at the growth trajectory, what we have seen over last 6 quarters, every quarter at an aggregate level, we have seen an earnings upgrade. And now if you look at, March quarter earnings, what is expected, it will be the slowest growth over last 6 quarters. So my sense is that, we have come a long way in terms of, how the earnings have shaped up. If you remember, during COVID, we were somewhere close to 450 rupees EPS, and we'll end this year with somewhere close to 980,000 rupees EPS. So a large part of, growth, and in fact, this year, FY24, we will witness one of the highest growth of late, which is a 20% kind of a growth. So going forward, if the growth is likely to slow down, you have two big major events coming up. And globally also, if you see that, rate cut cycle is just getting postponed. So my sense is that, we are in a trajectory where either we stay in this range or any kind of a negative news, I don't think that is priced into the market. So I would say that, we are more a little bit on the cautious side right now from here on, and we would have exposure to sectors which I think that, where at least the certainty of the earnings or the growth profile is much higher than the Nifty earnings growth. So I think we are more positive on, commodities from here on, to some extent, oil and gas as well, the OMC space. And obviously, banking being the largest sector, there we were not that positive earlier, but selectively we are getting names where, the growth trajectory is significantly higher. So trying to be a little more cautious, and we manage our risk pretty much, efficiently. So we are getting into that mode right now.
Ajay, you said elections and budget. The cautiousness around elections is just customary cautiousness around a big election like this, or are you? Is it more than that?
No, so Prashant, honestly, when everyone is in the same boat, and we keep talking about very big numbers on the election outcome, at times that really scares me. And especially, we all have seen how the voter turnout has been in the first two phases. So I'm just, we are not ready for any kind of a negative, and I'm not saying that, the mandate will not be there. But, we never know how the numbers can change and narrative can change. So I'm just trying to be a little more cautious going into these two big events.
Fair enough, Ajay. Some caution is always good, always warranted. And take your point completely. Yes. The expectations are running very high, and those numbers do look very, very big, the ones that have been doing the rounds. Thank you for joining in. We'll love to chat again in a couple of weeks' time. Well, that's a view coming in from Nuvama. Let's move on now and take a quick break. We'll come back on the other side. We'll, of course, have the latest from dealing rooms. Nimesh is going to join back in, talk about this big large cap rally that we've had on the street chatter. And we'll get Mitesh back in with some final trades as well.
Welcome back. Well, earlier today, we had pointed out two stocks at the start of trade in my morning chat. One was BSE on the downside, and it's not recovered. The stock is still down 12-13% approximately. And on the upside, I'd highlighted that AU Small Finance Bank, going by the RBI commentary that came out and, the regulations that they've laid, that is fitting the bill in terms of conversion from a small finance bank to a universal bank as we speak. It could be a couple of years or so away before it gets converted, but for the time being, the street seems to be pricing that in, maybe about a short covering as well taking place, which explains why that stock is up 6.5%. Mitesh Thakkar is back with us. Mitesh, we're booming along. You know, it's a great day. The Nifty Bank is unstoppable, 49,500 now. Your take?
I think that's where the momentum is. And, we did recommend a couple of financial names early in the day. Right now, Grasim is just breaking into a fresh high, so that's the BTST. Keep it stop below 23.75. Look for a target of 24.10, 24.15 for tomorrow. And State Bank of India from the banking side, that's the BTST with a stop at 819 for targets of 840.
Okay, all right. Thanks a lot for that, Mitesh. Well, it's that time of the day when Nimesh joins us to fill us in with what he's picking up. Nimesh, well, the bulls have come out and they're firing all cylinders on the first day of the week. What are you picking up?
Oh, absolutely. This has come from nowhere. Seriously, this is something which was not expected. There were no enough indication for such a large move in the market. Now the flows were that supportive as well. Big move, largely led by the bank stocks. The Nifty Bank is up 2.5%, and all the private bank stocks are rallying, 2.5-3%. So big move in the banking sector stocks, and that's led to a big rally in the Nifty as well. As I said, it's not supported by very large FI flows, so it's going to be a mixed day as far as flows are concerned. But yes, some bit of bidding is clearly there in the private bank names. Unfortunately, that's not been spilled over into the broader market. So the broader markets have really underperformed. So, it looks like good on screen that the Nifty is up 200 points, but at the portfolio level, not many are making money in the market today. So a bit of a mixed day, so to speak, from a trader's perspective. I guess, the trend of stock reacting to large numbers, that's going to continue. Look at what happened to KPIT Tech on a very strong commentary and 25 outlook. That stock is rallied pretty hard. So the earnings reaction is going to continue. But today's Bank Nifty move has clearly came as a bit of a surprise for many investors.
Oh, yes, absolutely. It indeed has been a big one. What about individual stocks? What's the buzz you're picking up on names today, Nimesh?
Well, so in terms of individual names, the first stock on my list is Jain Irrigation. Big move on that stock and on large volumes as well. I understand some interest seems to be back from larger HNIs in that particular name, and then that's particular name. And that's the reason why that's buzzing in trade today. So that's the first name. The second stock is Axis Bank. I spoke about big move in the financial names. Only Axis Bank was one stock which was indicated that there are very large buy flows. So expect high delivery volumes. And that's the reason why Axis Bank is also up 2% in today's market. The third stock is GB Realty. Again, it's sharply recovered from the day's low, with the volumes are on the higher side. And I've been pointing this for a while now that couple of triggers are anticipated for DB Realty. One, there could be a large joint venture for a couple of projects. So that's something which the city is anticipating. And also the merger ratio for the hotel business is pending. So even that could come very soon. So that's the reason why some bit of excitement seems to be there in DB Realty. And the last is GNFC. Again, the stock has been consolidating, but at these levels, some bit of accumulation seems to be clearly there. The flows are positive from the larger FIs, and looks like some long-only funds are quite active as well. So GNFC stands out purely on buy flows in today's market.
Okay, all right, Nimesh, thank you very much. Interesting list as always, and we'll track some of that as we go along. Mitesh is back with us. Mitesh, good afternoon. Okay, I think what we'll do is we will look at what else is happening in the market.
Sonal
235 points higher on the Nifty right now. I think Sonal is here with IOC, which will be reporting its fourth quarter numbers. Quick preview. Sonal, take it away.
Thank you for that. Well, in terms of revenues, we are expecting a growth of 5% on a sequential basis for IOC, but EBITDA will decline by 5%. Our margins are expected to decline by 70 basis points, leading to a profit decline of 6%. Now, remember, for all the oil marketing companies this time around, the macros are that refining margins, they are better. However, they have come off from Q3 levels, at least for the Indian refiners, not the standalone refiners. The marketing segment continues to do really well. And for IOC as well, good performance is expected in the marketing segment. Marketing margins or earnings should increase on better diesel margins as well. The refinery throughput for IOC is expected to decline 9% on a YOY basis. Sequentially, it will be up by 6%. Motilal Oswal expects the GRMs coming in at $15 per barrel, with gross marketing margins at 3.8 rupees per litre, which will again be led by diesel margins, and it is an increase on a quarter-on-quarter basis. However, they have the petchem business as well, where sequentially we have seen that cracks have come off, which should have a bearing on the company's petchem division. HPCL, on the other hand, is expected to do well in refining and marketing, so it will be a little split verdict when it comes to the oil marketing companies this time around.
Okay, all right, got that. Thanks very much, Sonal. By the way, there is no stopping the Bank Nifty. Just look at this rally. It's sizzling away, 49,400 and beyond. It took out the earlier all-time high, I mean the intraday high. And now the fresh high is closer to 49,473, so making its way to 49,500, almost a 1,200 point move. Big move at that. By the way, the VIX is up today. Just notice that VIX is again up about 10-12%. Yeah, there's about a 12% increase on the India VIX. That's something else to take note of today.
I would not think that that's so bad, Surbhi, because the way the VIX collapsed in the last week towards the end of the last series, one would think there were two factors that could play out. One is either the markets are getting a little bit complacent or we are bracing ourselves for a big rally. So I think it's returning back to mean. It's still at record low levels. So it's 12.2 is par for the course, I would think.
Okay, fair enough. So that's just a note on the VIX. Let's bring in our next guest, Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, is joining in. Sudeep, hi, good afternoon. So what do you think it is? What has been the trigger? I mean, sure, ICICI's numbers were good, Axis's numbers were good, but a 1,200 point move on the bank nifty. What do you think has happened today?
Well, Surbhi, I think market was waiting for some triggers. If you look at the entire BFSI sector, it was kind of languishing. And, there was no reason why it was languishing so much. And, it was just probably waiting for some good trigger for the entire sector to move up. And that's what pretty much happening with some of these large bank results. Of course, ICICI Bank results have been fantastic. Leave aside the loan growth, quarter-on-quarter loan growth and things like that. The margin, the asset quality, I think, the cost-to-income ratio, I think fantastic numbers. To think that on such a large volume, these are the numbers which are being posted quarter-on-quarter. And they have been doing it consistently for the last almost more than 2 years. So about 9-10 quarters they have been doing this. It's quite commendable. And that shows that there is still a lot of scope for improvement and increasing margins in the BFSI. There is a view going around that I think the efficiencies have reached the peak. NPL levels have probably become the best possible ever. And now from here on, things will start probably gradually increasing. But I don't subscribe to that view. And I believe that the way the economy is poised to grow, I think there will be significant upside from here. The loan growth is one thing which is not happening the way probably it should have happened. And that leads to the question of that private capex has not picked up. And of course, that again in turn is because of consumption. Demand hasn't picked up. So I think once these things get right, I think loan growth also will pick up. And that will give one more leg for the BFSI to move up. Of course, we have to be selective. We have to be careful as to what we are picking up in BFSI. But by and large, I don't see much problem in BFSI.
Okay, don't see much problem in BFSI. That's the view coming in. Sudeep, hi, good afternoon. Just a quick word on the big sell-off that we're seeing in BSE, Bombay Stock Exchange. Would you use this as an opportunity to buy or what? Wait and let it settle a little bit?
Well, I always believe in waiting, Prashant. I think it's a little unfortunate what is happening. BSE was running, and I think we had conversations around why it is continuously going up so much. And actually, we were not able to explain. Of course, it's in a very good space at this stage with financialization of savings happening at a rapid pace. The market, infrastructure providing companies like BSE are in a good space. And this is an unfortunate thing on that, the differential they have to pay, and it will affect their earnings. Though how much it will affect their earnings is not yet certain. There are multiple views around that. But I will definitely like to wait and watch and see where it settles down before I recommend a buy. But yes, for a long-term investor, BSE can definitely be bought at the right level where it settles down.
Okay, all right. Two other names, right, which are moving. One is AG's Logistics, which the stock will come up. It's up another 10%. It's a huge outperformer this year so far over the last 1-2 months or so. And then Tejas Networks, right, reported those numbers, which were blockbuster. Stock, of course, again, has done phenomenally well, but that was quiet last few days. It's up another 10% today. 8-9% on your screen now. 1108 on Tejas Networks. We'll take a break. Sudeep, of course, is with us. 9 minutes to go for close. We are back in just 2.
ऑपोजिशन की सारी पार्टीज, राहुल गांधी, कांग्रेस, सब ये कहते हैं कि मोदी जी ये जो है मैच फिक्सिंग कर रहे हैं इस चुनाव पर। उन्होंने कहा है कि ईडी, सीबीआई और ईवीएम के बिना आप चुनाव नहीं जीत सकते। क्या कहेंगे आप?
Welcome back. Well, we have PNB Housing Finance numbers flashing for you at the bottom of your screen. NIIs are up a little bit. The consolidated profit is up far more, up 57% odd. So that one clearly is the one that's flying away as we speak. Big spike up is what we're seeing on that counter as well. Sudeep still with us. Sudeep, I wanted your view on a couple of other stocks. Loris Laboratories. Not this quarter, the next one, not next one, the next one. But now the street is pricing in. After the results, in fact, the stock is higher. Despite of seeing some very, very poor numbers in the past quarter, the street clearly believes there's a story ahead. What's your take on the stock? It's holding at around 445 rupees.
Well, I think there is a story ahead, Nigel. I think at one point of time, we were all bullish, but I think consistently they have been underperforming the expectations, and market has significantly punished it. And at this stage, post what results they have published, pretty much we believe that the worst is now behind, and things will start improving from here on. Overall, pharma, we are mildly positive. We are also positive, particularly on domestic pharma companies rather than completely US-focused pharma companies. And Loris is one of our bets at this stage, but for an aggressive investor.
Okay, those are some bets. Just looking at some other movers and shakers, let's look at Nestle as well. Nestle is actually holding up quite well in trade for the time being, up about 1%. In terms of earnings, Trent is, of course, in focus on the back of Q4 numbers. Let's go across to Mangalam and understand what the fine print is like. Mangalam, so is the performance as good as how the stock performance has been?
Well, the stock performance has been a lot better, but this time around as well, there's no real question about weakness in the performance. In fact, the company has reported 51% revenue growth. The EBITDA has actually jumped 131% as the company's stores mature and they add new stores, etc. as well. And the net profit obviously is a big jump, 712 crores versus 45 crores. That's largely because of a one-time gain, which is 576 crores. This is because the group reassessed the estimates of measurement and recognition of some of their right-of-use lease assets. So lease liabilities have come down, and that's reflected in the P&L. But even if you take that out, the numbers are better. So we had two estimates on the street. We had Jefferies and Motilal Oswal. These numbers are slightly below Jefferies' estimates, but much above Motilal Oswal's estimate. So this would go down as a bit of a beat in terms of numbers. What's also heartening is the kind of commentary that the company is given. They have added around 12 West Side stores and 86 Zudio stores in the last quarter. The total Zudio stores stand at 545, West Side at around 232. Zudio has been a growth driver, but more importantly, their other stores, other lifestyle concepts have been 34 stores as well. So this is something that brokerages keep talking about, the optionalities that the company is building with Star Bazaar, their ethnic wear portfolio, Utsaah, etc. as well. So once these start to grow, they will contribute to the next leg of growth for the company. The other heartening fact is that the company said that the gross margin profile of both West Side as well as Zudio remain consistent with what they were in the earlier trends as well. So no real margin pressure that they're seeing with the expansion that they're doing in their overall store portfolios as well. The stock trading at around 45, 46 times 1 year forward EV to EBITDA obviously has priced the sun, the moon and the stars, but these are not bad numbers.
Okay, well, Mangalam, what can I say, right? It's a big universe beyond the sun, moon, and stars. So maybe there is more there. But nice sort of summary of the numbers trend there. I don't know, Sudeep, quick word. Do you like this one, or do you own this one, by the way, Trent?
We do own some, Prashant, but I think Mangalam put it very nicely. It has factored in sun, the moon, and the universe. So yeah, I don't think I will, recommend a buy at Trent now. I mean, everything is fine. I mean, the company is doing very well. Everything is good. But I think, if somebody has to buy, I would like to take a bet on AB Fashion now. I think they are trying to get their act together. I mean, unfortunately, they have not been able to get it together. I mean, they have been laggards compared to Trent, but they have the ingredients and they have the brands. I think they are taking the initial steps there. So I would say if somebody has a, let's say, 1 year kind of a horizon, let's bet on AB Fashion and retail rather than Trent.
Okay, well, you can, of course, smile pretty with your portfolio shining because you do have the sun and the moon and the stars in it in terms of that holding. All right, Sudeep, always a pleasure having you on the show. Thank you so much for joining in. Good to get some perspective from you. We're coming down to the last few minutes of trade, and it has turned out to be a really, really solid day. The complaint can be that, yes, mid-caps took a bit of a breather, but no such issues. The large cap screens, a completely large cap driven move. A near 1,200 point rally on the bank nifty, leading it from the front. And, all banking stocks participating. It's not just one or two names. It's across the board. ICICI Bank, 4% up. IndusInd, 3%. SBI, 3%. Axis, 2.5%. Kotak Mahindra Bank coming back from the blows that it received last week. HDFC Bank up about 1%. So it's sort of all the soldiers marching in together. In fact, beyond banks, even Bajaj Finance found some takers today after the dropping that it got on Friday. So strong showing from the banks. TCS, Reliance, these are some of the other names. L&T, these are some of the other non-bank large cap names. Airtel, that also contributed to the big screen party today. But on the flip side, yeah, you've got some severe reactions on the downside. There's no taking away from that. HCL Tech on the earnings, 6% lower. Not much improvement there throughout the day. And, of course, Apollo Hospitals on this whole deal with Advent and the merger with the promoter entity. Market's still having lots of questions. 4.5% on that stock.
Well, that's right. Quite a few stocks will move around should be in today's trading session. Lloyd's Engineering Work, we don't talk about that stock very often, but that stock was up close on 10% on massive volumes. Jamna Auto was up 7.5%, so big up move out there. IRDA was up close to around 7%. Bank of Maharashtra up 5%, so some of those big volume movers in trade. On the flip side, IDFC First, IDFC Bank, both of them down to around 4.5%, and it's a rarity. SAIL didn't sail today. That stock, in fact, ended with a cut of around 3%.
I should also mention one more. AU Small Finance Bank. Remember, the brokerages feel that this is the one that will move the quickest, perhaps, from being a small finance bank to a universal bank. And by the end of it, there was a nice move, 7.5% on AU Small.
Absolutely. And, very, very rich market in terms of stock reactions. So lots to do, lots to track. It's a wrap on this edition. A closing bell from all of us here. Goodbye. Thank you for watching. But stay right here with us because markets forward will pick up on all the action in just a bit.